Hello everyone and welcome back to Dollar Moat. Today we'll be discussing Tyro Payments ASX TYR. Considering Tyro Payments' current media attention due to its terminal connectivity issues, it will be pretty useful to analyze and refocus the possible long-term benefits as well as the potential disadvantages of a company. In terms of structure, this video will start with a company overview and then discuss the interesting points of Tyro and then the concerning areas. So in terms of the company overview, Tyro Payments is a B2B, so business to business, Australian founded company that provides payment solutions, of course, as well as banking products. They are able to provide banking products since Tyro has a banking license. In terms of the payment side, this mainly occurs through third-party supplied terminals that then connects with Tyro's technology platform and vertical-specific solutions. In terms of the bank products, they have, of course, 1, loans, 2, the bank accounts, as well as 3, term deposits. Tyro currently has 32,000 merchants and approximately 62,000 terminals. These numbers do not include their recent alliance with Bendigo Bank, which will improve these figures and will be discussed later. Tyro provides these services to 3 main verticals, and they have in fact recently started to enter a 4th vertical. The 3 main verticals Tyro is currently operating within are 1, hospitality, 2, health, and 3, retail. Through this, Tyro's revenue is generated from 3 main sources, which are payments revenue, lending income, and investment income. More specifically, payments revenue includes merchant service fees, terminal rental income, and terminal and accessory sales. Notably, this merchant fee is where the majority of their revenue is derived from. This fee is calculated based on a pre-agreed percentage or a defined number of cents per transaction. The second, being lending income, primarily consists of interest earned on merchant cash advances. This section includes the business loan segment that charges a fixed fee that needs to be repaid in addition to, of course, the loaned amount. And the final source is simply income that is derived from their investments. This overall is a summary of Tyro. In terms of their financials, they had about 200 million in revenue in FY 2020, and they are in fact not profitable. However, this is not too surprising as management has repeatedly said that they are not trying to be profitable at the moment, as they are still very much in the growth phase. They also have, as of FY 2020, 122 million in the cash accounts. With that said, let's now have a look at the more interesting points of Tyro and then subsequently the more concerning areas. The first interesting point is Tyro's operating leverage. Tyro at the moment is not cheap to run and has significant expenses. Their main expenses seems to be 2 elements. 1, direct expenses. So what this refers to is the scheme and interchange fees as well as the integration support. And 2 are the OPEX, so the operating expenses, and this is mainly employee expenses. As a result, it is important to see signs of leverage, and in fact, we are seeing it, as Tyro has been able to show a lower operating expenses ratio as a percentage of transaction volume. You can see this quite clearly from the trajectory of this red line right here. This is important since Tyro needs to prove that it can be scalable without attracting too much cost, as this is essentially their road to profitability. It should also be noted that when the business loan segment previously touched upon increases, as this is still in fact in its very early stages, this will likely assist with Tyro's profitability. In fact, this is a good segue to the second interesting point, which is the business banking segment. The most interesting area in the business banking segment is the business loans. Tyro gives loans to their merchants that are capped at 10% or $100,000 and then subsequently $120,000 after their first loan amount, whichever, of course, is the lower. It is also worthwhile to note that previously this loan facility was only available to 7,500 customers, but is now available to all 32,000 merchants. In my view, this loan vertical is a very large growth trajectory and has a high margin rate, with an average of 80% gross profit margin. They only earn a fixed percentage amount that is agreed upon prior to the loan commencement. That is, the total amount the merchant has to repay is equal to the loan amount plus the fee. While still in its infancy, if this is able to achieve substantial growth, this will be great for the financial stability and profitability of a company. I personally really like this business loan by Tyro as it is structured quite nicely. They do not charge early repayment, late repayment, or any other interest or fees. Loan repayments are in fact made daily, calculated at the nominated percentage of a merchant's card transaction value on each day. This effectively puts Tyro first in line for loan repayments as it comes daily from the transactions that occurs in the actual merchant shop/business. The advantage of this product for the merchant is it aligns repayments with the daily card transaction value, which as a result assists with their daily cash flow. This, in my opinion, is quite a neat process, which is beneficial to not only Tyro but also for the merchant. The third interesting point is the fact that Tyro has the highest amount of POS integration systems compared to any other competitor. This is particularly relevant in the verticals Tyro operates in, such as the hospitality and the health industry, as they need access to specific back-end services. This will be attractive in getting new merchants to jump onto the Tyro ecosystem. With that said, let's have a look at the more concerning points of Tyro payments. Tyro is quite dependent on macroeconomic events. This is mainly because the Australian business and banking segments is largely dependent on consumer confidence as well as general spending. Therefore, a decline in economic conditions or large macroeconomic effects, such as, for example, the coronavirus, can reduce consumer confidence as well as spending magnitude. Even more relevantly to Tyro is that two of their main verticals, being hospitality and retail, is largely discretionary. That is, it is not compulsory and can be quite malleable depending on the consumer's needs. In addition, both hospitality and retail payments are largely derived by in-person and foot traffic. Therefore, their payment growth depends on this discretionary spending to continue to increase and for continued in-person transactions to occur. A decline will indeed impact their financial performance quite significantly. The second concerning point is their competitive landscape. Their competitors are namely the four major Australian banks, as well as other non-bank AusPay Net members. So this includes non-Australian technology-focused payment providers, such as, for example, Square and Stripe. It should be noted in this graph that Bendigo Bank as well as Tyro have entered an alliance which provides Bendigo's terminals to all of Tyro's. And in fact, this figure should be added together, which will be 93,000 terminals. Even though this is the case, a natural question is what is Tyro's competitive advantage in order to maintain and extend their market share in this environment? It is important to point out that Tyro does not manufacture its own terminals and in fact relies on a third-party supplier. Rather, Tyro says that their competitive advantage is their software and technology platform that is provided in the background of the actual terminal machine. They say that they offer specific useful features for the verticals that they are targeting. So, for example, the health vertical can easily connect to the Medicare Easy Claim system, and the hospitality vertical has specific features such as pay at table, splitting the bills, tipping, and having guest tabs. It can also be said that another competitive advantage of Tyro is that they appear to be the cheapest. I am not sure if either of those two competitive advantages are enough to restrain from market movements from competitors. However, of course, alternative views are always welcome, and I'd be interested to hear if there are any other more clear competitive advantages of Tyro. Overall, that is a bird eyes view of Tyro payments and hopefully provides some utility to the long term view of a company. This is especially important at the moment considering the current terminal connectivity and robust news attention that Tyro Payments is currently receiving, and which has in fact pushed the price down to $2.32.